What's up everyone, Travis the Stock Geek here, and today I want to talk about one of the most common mistakes that I see beginner investors make. So hopefully after today's video, you won't make the same mistake. I was talking to a friend of mine the other day about a stock that I really like that I think has a lot of potential. And that stock happens to trade at about $110 per share today. And I think in a couple years it can be worth a couple $100s a share, which would be a great return. Now, he heard that and he said, $100 per share, oh, I've only got a few $1,000s in my trading account. That's too expensive for me because I can only buy a few shares. And I told him, wait a second, that's actually the wrong way to look at it. And I gave him a perfect example why. Imagine 5 years ago, you just had $1,000 to invest in a stock. And you looked at a stock like Amazon, which at the time was trading at about $300 per share. If you were my buddy, you might have said, oh, that's too expensive and I can only afford 3 shares. And so you might have passed on it. And then you look at a company like Sirius Satellite Radio, which was trading at the time at $3.50 per share, and you could buy a couple hundred shares with your $1,000, and maybe you made that investment, but that would have been a mistake. Now, you would have had a gain in Sirius of about 90%, so you would have turned your $1,000 into almost $2,000 within 5 years. But just 3 shares of Amazon would have turned $1,000 into almost $6,000 because Amazon stock has gone from about $300 per share 5 years ago to almost $1,800 per share today. So looking at price per share alone is not a good marker of what your percentage gain potential can be. And in fact, the number of shares or the price per share alone do not, really tell you whether a stock is expensive. It doesn't even tell you how large the company is currently that you're investing in. So let me give you an example. Let's go back to Sirius Satellite Radio. Today it trades for about $6.50 per share. But Sirius has billions of shares outstanding, and so the total market value today of Sirius is actually $28 billion, which is not small. So you have a small price per share, but the total value of the company is actually pretty high. And you might look at another company like Boston Beer Company, which makes Sam Adams beer. And they're trading at $385 per share today, but they only have 11.6 million shares outstanding. And so the total market value of that company, price per share times the shares outstanding, is actually only about $4.5 billion. So you have Boston Beer at $4.5 billion total market value, but $385 share price versus Sirius, $6.50 share price, but a $28 billion market value. So you can't know market value alone just by looking at the price per share. So let me just give you another visual to help drive this point home. We're going to pull our whiteboard over here. And I'm going to draw us a large pizza. Give it a shot anyway. So we'll throw in some pepperonis for some spice. I know that kind of looks like the moon, but we're actually going for a pizza here. Now imagine you have this large pizza and you make a couple of cuts and you slice it into 4 pretty large slices and you're about to eat it. But then all of a sudden you have a bunch of friends come over and they show up and you decide, actually we need more slices to share. So you make a couple more cuts and you slice your pizza into 8 slices. And so you have more slices, but you have the same total amount of pizza. And we could keep slicing this pizza and making smaller and smaller slices, right? But what I want you to understand is that the size of one slice doesn't determine how much total pizza you have, right? We could keep slicing and slicing, but the total amount of pizza that we have doesn't change. It's the same thing with a company. A company can arbitrarily change the number of shares outstanding through things like stock splits or reverse stock splits. But you need to also know, the price per share times the total amount of shares to get an idea of what the total value of the company is. The price per share alone doesn't tell you much. And the other thing about, what I'm trying to say today about price per share is again, it doesn't tell us anything about how expensive or cheap a company is. What drives the total amount of value of a company? It's fundamentals, things like how much cash flow the company will generate into the future. And obviously we're looking for small pizzas that can grow into very, very large pizzas. And sometimes large pizzas grow into like extra large pizzas, like in the case of Amazon. So, whether the company has a low share price or high share price doesn't really matter. And sometimes even the company's starting market cap doesn't even matter as much. We're looking for the companies that are going to increase in percentage terms the most. And sometimes those start out as small companies and sometimes those start out as large companies that get even larger. So I'll talk a lot more in future videos about how we go find these undervalued companies that we think are going to go up a lot in percentage terms. But just remember that share price alone is not a good guide for you as an investor. And hopefully that's helpful. And we're going to talk a lot more about how we find great stocks in the future. Take care, guys.